Ladies and gentlemen, welcome back to High Performance Trader, the YouTube channel that collects reliable data and builds profitable day trading systems based off that data. I'm Joshua Salvetti, and today in this lesson we are going to be breaking down the key to becoming a confident and consistent trader. See, if you're like most traders, you're stuck in a vicious cycle. A cycle that costs you much more than money. It costs you your confidence. It costs you your ego, and it costs you your sanity. See, I've been trading for over 6 years, and throughout these 6 years, I had this vicious, repeatable cycle of self-sabotage. I had no problem with making money. But then after about 3 weeks, usually, I would self-sabotage my account. I would go full retard mode, and I wouldn't be able to properly understand the market information. We call it perceptual distortion. And what happens is the market's reality and your reality no longer align. And it's because of fear, it's because of doubt, and it's because of incompetence. See, when your fear settles in, it will do your body, your brain, it's such a complex mechanism. It will do anything to avoid the mental pain that comes from taking a losing trade. So what happens is while you're watching market information and the market's just printing candles, your fear will distort the price action. You're no longer to objectively read price. And this is why our strategy, the HPT cross, is so effective. So if you click that first link below, it's going to bring you directly to my website where you can read this document in less than 5 minutes and learn a strategy that's going to keep you grounded in the present moment. What do I mean by present moment? I mean no more perceptual distortion. No more making decisions based off fear. If you follow this strategy that I've tailored to any trader, it doesn't matter how long you've been trading, if you follow this simple 3-step approach, you're always going to be trading off current market information. And the most beautiful part about this strategy, if you come down below and you click here, which is my high-level summaries I create, my data reports, you're going to notice this strategy currently, over the last 8 months, has an 81% win ratio. Now, what does this mean? Obviously, yes, it means 8 out of 10 trades are going to land you in a profitable position for at least $1. But what this number means to me is I no longer have to make emotional decisions. I no longer have to trust my gut. I no longer have to predict what the market's going to do. On the contrary, if I follow this approach, I'm approaching the market from a reactive state. Now, what's so beneficial about approaching the market from a reactive state is that we no longer are making emotional decisions. We no longer are approaching the market with that perceptual distortion. So today in this video, we're going to break down the first week of April. We're going to break down the trades we took. We're going to break down some data. See, data is the key to becoming a confident and convicted day trader, right? So when you go to that document and you go all the way to the bottom of the page, I want you guys to check out some of these testimonials from traders that have recently joined HPT, right? These are traders that made the decision to come join our team and have built that consistency, that confidence. They've been here for less than a month and they are already executing the way that they've always been meant to execute, right? And execution is key. This is why I'm always talking about execution. And everything I do, every resource, every course, every video I make is made for one reason: to help you execute in these markets flawlessly. So punch your first name, last name, and email, and I will send you these data reports that we're going to go over today on a weekly basis. See, data is king. Once you stop making emotional decisions and you start making decisions based off a strategy that's backed by 8 months of data, you no longer have to think. You no longer have to worry. Does it make trading easy? No. But does it simplify it? Yes. And that's how it's got to be for me. It's got to be simple. If it's not simple, I'm not going to be able to do it. Right? So let's break down some trades. Last week, our edge presented itself 5 times. Out of those 5 times, one of them was not a profitable position, right? It did not move in our direction for $1. We're going to break it down. See, clarity is the goal. See, most traders can't obtain consistent results because their expectations are way off. See, to become a consistent trader, you need a consistent input. Newton's third law: for every action, there's an equal and opposite reaction. Therefore, my action, my stimulus, must match my response. My stimulus has to be a simple 3-step approach if I want to get consistent results. If you want consistency, you need to approach the market in a consistent fashion. And that's exactly what I've done in these data reports, is get very clear. I've clarified the exact criteria it takes for me to actually pull the trigger and get into a trade. Let's talk about them, right? So here's a beautiful example of our edge right here. What are the required specifications, right? Got to be clear. Number one is we have to trade off open print. Open print is the 9:30 bell price displayed below with a yellow line. We trade this because of its volume, right? And this is why this document is so effective. If you come over to my website, it breaks down in clear detail what a pit number is and why it's so important. Volume shows us where large money is. We can't move the market, the banks do. Therefore, we have to watch what the banks are doing. How do we watch what the banks are doing? We watch where they're doing what they're doing. That's at open print, that's at previous day high, low, open, close. So step one is identify open print. Step two is going to be identify the moving average cross. This is the EMA cloud. Why do I like the EMA cloud? Because it's very clear. It goes from red to green, from green to red. What does this do? It keeps us from falling into that perceptual distortion. See, when fear is present, whether you're sizing up, whether you've gotten smoked last week on the market, fear is going to pop up on you. You need tools. You need ways to be able to look at the chart and go, okay, what color is that EMA cloud? Has it crossed over? If so, I'm looking for shorts if I get this green bar that gets ignored. It's the third step to this criteria. The RBI, GBI entry criteria. Red bar ignored, green bar ignored. Why is it so effective? Because to become a consistently profitable trader, you need a system that really focuses on risk reward, risk management, capital management. See, we're not traders, we're money managers. We manage capital, meaning we manage winning trades and losing trades. See, the market's an extremely unstructured environment, an environment that me and you are not used to. See, if you're brought up in the world society teaches you, if you make a bad decision, you get punished, usually by somebody that has more authority than you or is bigger than you, right? Now the market, you make a bad decision, the only way you're getting punished is by losing money, but nobody's going to take you out of your trade, meaning you can blow your whole account. So we are programmed from a young age to not be able to make the right decision when it matters most. And what I mean by right decision is by exiting a losing trade when the market tells you to. This strategy does that for you. When you enter in the market based on a green bar that gets ignored, you put your stop loss directly above the green bar. This clarifies, I'm only risking 1 bar, and on my winning trades, I'm making 2, 3, 4, 5 bars. You never have a large loser when you execute this strategy appropriately. So if we come here, you're going to see this was Monday. Beautiful price action Monday, right? We got our strategy presented itself flawlessly right off the open. We took the market short on the 940 candle, this red bar, moving average cross off open print. Price even retested open print, and then we got the green bar ignored, went short, flawless. Later in the day, price then rallies back above open print, consolidates. We don't get any RBI here until this 1045 candle where we take the market long and we put our stop loss below the previous candle. See, once again, guys, every single day I approach the market with the same criteria. Open print, moving average cross, green bar ignored, went short, got stomped out of the trade. It is what it is. Out of 5 trades, 1 of them isn't going to work. But guess what happens when I'm in a losing trade? I know exactly where to exit the position. There's never a point in time where I need to question my stop loss. On the contrary, I'm always extremely observant. I am always focused, dialed in, because I know if this GBI here doesn't continue to be respected, the market's not doing what I want it to do. Therefore, I'm getting out of the trade, right? And then look what happens the next day. We get the same three-step approach: open print, moving average cross, green bar ignored, in the market short, stop above the green bar, got a beautiful trade to the downside. And Friday, flawless price action. It's a bit hard to trade due to the volatility, but notice here, open print, moving average cross, green bar ignored, short, stop above it, beautiful move, respecting the criteria, right? So this was the first week of April. March was a phenomenal month, but this is the thing. Every month, if you come over here to the large data review that's in the high level summary, you start to notice some patterns. Look at this. We are hovering each month around a 72 to 88% win ratio, right? We get very consistent numbers on this strategy, right? On average, we're getting around this strategy to present itself at an 88% win chance, meaning there's an 88% chance that this strategy is going to show up, and there's an 82% chance that it's going to land you in a profitable trade. Now, once again, the 82% win ratio doesn't just symbolize 8 out of 10. What it symbolizes for me is I can learn to trust it. I can learn to execute it. And if I execute it appropriately, I will obtain consistent profitability, right? So guys, get involved, make that decision, at least sign up to get these sent to you on a weekly basis so that you can study the data and become a trader that trades without emotions. I'm Joshua Salvetti. I love you guys, and I will see you in the next lesson.